everybody. We are coming to you from a very unique spot. Sonu, where are we?
We are in Omaha Airport, and you see there's a lot of construction here. So you may see open joists and things like that, but this airport's getting ready for the next tomorrow for America's 250, I guess.
We're in town. Carson had some stuff, and this airport, they've got a lot of work to do. Talk about the economy. We're going to spend a lot of money to fix this airport. I bet they could use it. But listen, this is the latest glass half full. We did this a couple times, had some technical difficulties, so we have to do it from the airport.
And here we are.
Oh, we get close to each other,
All right.
kind of like that. There we go. All right, so we're going to call this one "What Goes Up." Think about the market, right? We've had this amazing rally, but some of the last week and a half, give or take, by the time people hear this, what goes up sometimes goes down. Talk about that.
Yeah, and especially what goes up really fast, really quick by a lot, tends to have a pullback. And we've seen that in the market over the last 2 months. I mean, last 3 months, we've had some volatility because of the war, obviously. But from March 30th, we've seen a huge comeback for the S&P 500 with technology stocks leading the way, almost to the point where we are back talking about a bubble.
Yeah. We're hearing that, the bubble talk. I don't think it's a bubble. We've talked about that before. But the reality is we just rubbed 9 weeks in a row in the S&P, 9 days in a row not that long ago, 19.5% rally in those 9 weeks, the greatest 9-week rally we've ever seen. We were due for this, right? Markets tend to go up, they go down. We had what we call a Six Sigma event in technology, how much technology outperformed the market 50 days off those lows in late March. So Six Sigma is supposed to happen once every 4 million years. It just happened. That's so let's talk about portfolios, right? So I guess what I should put a bow on this, it's not shocking to see a lot of these memory stocks, semiconductor stocks, technology stocks having a rough go of things lately after the historic run. I mean, semiconductors are up 70% in 2 months. We were probably due for something. From a portfolio point of view, how do we think about things?
This all started last Friday, which is interesting because what happened on Friday is that we got really good news in the form of payroll report. The employment situation report for May was really solid. Over the last 3 months, we've seen job growth average of 188,000. That's much better than what we saw across all of 2025 when only 110,000 jobs were created. The unemployment rate is at 4.3%, historical low. The employment population ratio for prime age workers, 25 to 54, that's at 80.8%. That is higher than at any point we saw during the last two expansions, 2000s, 2010s. So the economy is in good shape, but we've seen this huge run up in AI-related stocks because they're spending a lot on capital expenditures, data centers, things like that. And one company's spending is in other companies' revenue and profits, and that's what we're seeing. Now, we did get really stretched. I tracked something called momentum stocks that are going up really quickly, really fast. That momentum stock basket was up, Ryan, over the last 12 months at the 90th percentile relative to the last 40 years. If you look at a 3-year history, 3-year rolling period, the 3-year return was at the 99th percentile. Usually, what goes up can, yes, keep going up. We say momentum begets momentum, but sometimes it has a bit of a pullback, and that's where we are.
So building on those, we were just up more than 19% in 2 months off those lows. Sonu, only 7 other times in history has that happened. Here's the good news, everyone. And this is major lows, like off the 75 lows, 2009 lows, 82 lows, 2022 lows, or 2020 lows, 2025's in there, 98's in there. History buffs, those are sometimes you had a massive rally, but that momentum did continue. 1 year later and 6 months later, market actually is higher every time, those 7 instances. So listen, we might have some indigestion here a little bit in June. That's not the end of the world. 2 things that encourage me, and we probably need to wrap it up. We have seen a lot of fear come in. Put to call ratio has been spiking. Put volume's been very high. Those are kind of bearish bets, or at least hedging bets. Think about insurance. Investors tend to buy a lot of insurance when they don't need it at the worst possible time. So maybe there's a contrarian play there. And then just rotation. Yes, technology's pulled back. All these high flyers have. But you look, regional banks been really strong. Financials in general have come back. Industrial's been pretty good. Healthcare has been strong. We've been seeing a lot of things that have really been coming back, which have been real positive. We hit 5-minute mark. But I wrap it up. What else do we want to talk about?
I think getting back to the idea of portfolio construction, like if everything in your portfolio is going in one direction, whether it's up or down, you're probably not diversified. Especially at times like this, if everything in your portfolio over the last month, 2 months has gone up, they're probably not diversified enough. Friday and what happened this week, Monday, Tuesday, Wednesday, is a reminder that you need to be diversified, right? And that doesn't mean getting out of the market. There are areas of the market, like you mentioned, Ryan, financials, healthcare, industrials, that give diversified exposure to technology.
So listen, it's been a wild ride. It's still been a good year, right?
Yeah.
I mean, the stock market's up globally all over the place, right? There's a lot of gains that have taken place. Yes, bonds haven't done as well. Gold's obviously come back. Commodity in general have done okay, but they've been pulling back a little too. But we're still positive, right? Our mid-year outlook's going to come out here in a few weeks. We'll relay that when it happens. But there's still more overall positives than negatives, I think. Biggest negative right now is, will we get home? That's I will say. So I have a nice hot chocolate here. What are you drinking, Sonu?
I have a chai latte. One of those, so it's early morning. We should have been out of here right now, but we are going to spend another hour at Epley Airfield.
Yeah. So we're in Omaha. We'll end it with this. The Warren Buffett, right? So this is Warren Buffett, greatest investor ever, or one of the greatest. But I can't make a comment like that with compliance, but definitely considered one of the greatest ever. And he lives in Omaha. He said that he looked at the actuarial tables and realized the longest life expectancy, Sonu, was a 6-year-old. So he started eating like a 6-year-old. That's his joke. That's why I drink hot chocolate all the time. I do not do coffee. I just do hot chocolate. So everybody, this is your latest Glass Half Full. Ryan and Sonu live from Epley Airfield in Omaha. I don't know where I am. I'm tired. It's early, guys. Trust us, it's early. But what goes up? Yeah, it can go down.
Sometimes has a bit of a pullback. That's why you want a diversified portfolio.
And as Bert has told us, Bert White, our CEO, volatility is the toll we pay to invest. This is still going to be a good year when all is said and done, we think. It's been a good year so far. Just buckle up. This volatility is probably not over. We'll see everybody very soon, hopefully from home next time we see everybody. Take care. Bye-bye.